Well, if you're watching this by recording, we're going to do the chapter. We're going to do the SARS homework, statements of standards rather for accounting and review services. And then we'll be going over the attestation standards. So with the homework, why don't I go ahead and start with what we had in the handout. So what I had in the handout was right here. We have three cases. So case 1, case 2, case 3, right at the very end of the handout from last week. So contrasting audits, reviews, and compilations. So discuss type of engagement, whether it be an audit or a review or a compilation, which would be most appropriate for each of the following clients. We'll assume that each client is a non-public entity unless otherwise indicated. And we'll also assume that each client wants to minimize costs, so let's pay the least we can. We'll briefly justify our answer. So first of all, if a retailer's bank wants to know that the financials do not need major modifications. So which type of report would this be? Review. So no major modifications. They're trying to minimize costs. Well, a review sure is a lot cheaper than an audit. Then, if a manufacturer, whoops, I need to share my screen, pardon me, if you're watching this via recording. Go ahead and do that. There we go. So number 2, what if manufacturers' debt instruments, namely bonds, are publicly traded? What would it need? An audit. Exactly. The SEC says so. Even if their stock is not publicly traded. Then, number 3, the client has omitted substantially all the disclosures required by GAAP. The accountant does not build financials, will be misleading to readers. What would we probably do there? Yes. Compilation. That's exactly right. We can still do that. And like I was telling you last week, the vast majority of compilations do exclude all the required disclosures the GAAP says. It's not really a negative thing, but we just have to bring it out in our compilation reports. Then number 4, the accountant is not independent with regard to the client. What would that be? You got a compilation. Number 5, the accountant must also perform bookkeeping for the client. What would that be? It's not going to be an audit. Preferably compilation. Exactly. Now this does happen for reviews that it's not the best thing to do bookkeeping and review your own work. So it's best being a compilation where you give no assurance. Then number 6, the client wants negative assurance in the accountant's report. I should put limited here too. So we want negative or limited assurance in the accountant's report. Review, you got it. So it says we find nothing to indicate something's wrong with those financial statements. We have to go through the review procedures to do that, because otherwise, if we never did any procedures at all, we could always make that statement. Didn't find anything. Then number 7, the client wants positive assurance in the accountant's report. That means an opinion. Audit. Number 8, the client's financial position is uncertain, and its owners would like to shift some risk from themselves in the event of bankruptcy. And yes, I agree, the account would not be too likely to accept this one, but what would that be? Maximum risk to the auditor. So this risk has been shifted over to the auditor. Number 9, the client only wants to make sure the financials are free from obvious errors. What would that be? Yes. Compilation, that's right. Number 10, the client does not wish to corroborate the financial information given to the client. What would that be? Audit, review, or compilation. Any idea? Yes. Compilation, you got it, because we gather no evidence. So no corroborating evidence. Then number 11, the client stock is not publicly traded, but the client wishes the accountant to give the highest level of assurance possible in his or her report. What would that be? Audit. An audit because we give positive assurance and opinion. That's the highest. And number 12, the client's financials will be public documents. Audit, yes, like an SEC company. So any questions on those 12? Okay. Then we had case 2, the procedures involved in a compilation. So the Lakeland Lock Company has approached you to perform a compilation of its current year financial statements. No previous years will be presented in comparison. And first of all, why should we contact the predecessor or accountant? What useful information could they provide? And how would you go about contacting the predecessor? So to answer that last question first, we get client permission. They sign a form. We send a copy over to the previous accountant, the predecessor, and they send it back to us signed. And then they've got permission to release the information. But we should contact the predecessor. It's not mandatory, but we really should do it anyway. Predecessor gives us a lot of good information on this client. So some of the information, problems they've encountered, how long it took them to do it, if records are located in multiple locations or something else that could make this engagement take longer. The reason for the accountant change was understood by the predecessor. That way, clients cannot sweep bad things under the rug and just change accountants to do it. By the way, if we're contacting that predecessor, predecessors are required to respond promptly and in full. We know they don't have to compromise existing litigation, but if they say to us, we cannot comment because we're currently involved in litigation regarding this client, well, I think by their silence, they just told us all. Because what will we do in that case? Get out of there, yeah. Well, then number 2, how should you document your understanding of the engagement with the client? What areas should you, or items rather, should you specifically address? So we should do so in an engagement letter. So some of the major things in there, we describe what a compilation is. It is not the same as an audit. An audit gives positive assurance, compilation gives no assurance. So it's not the same as an audit. Audit gives Positive assurance, compilation gives none. We don't gather evidence on the financial statements. So we do not assert that we'll find misstatements of those financials. So we give no assurance that we'll find misstatements of those financials. If we do find a misstatement, we will bring it to the client's attention. We just make no guarantee that we will. We usually give estimated fees, an estimated fee of completion. Estimated fees, estimated date of completion. And we'll have the client sign it so that we have a contract. Number 3, how could you acquire knowledge of the local law company and of its industry? So the law company itself, these are things that we have covered, especially in the first auditing course with audits, but the same types of things. We would take a look at any previous financial statements. We'll tour the client's facilities. That way we see things at work. And most likely we're going to have some meeting with the client to plan the compilation. Usually some meeting with clients to plan the compilation. And if we've done this client before, we'll be familiar with them already. We would just focus on updating our knowledge. Of its industry, we may be already familiar with it, but if not, the AICP's industry audit and accounting guides are very good. The AICPA's industry audit and accounting guides are very good. Trade publications, the appliance industry, that's another good one. Then number 4, what procedures should you use to perform the actual compilation of financials? Simple. We get the financial information from the client first. Now, sometimes we have to do bookkeeping or other services to put it together. That's okay. Client's got to pay it. So you get the information from the client, financial information. We write up the form of financial statements. We write up the form of financial statements. Then we read it over for obvious errors. No real assurance, just obvious errors. Then we write a compilation report. See that? Write a compilation report. So speaking of that compilation report, number 3, we just did the first 3 cases. Discuss each of the key points conveyed by the standard compilation report. Well, just kind of the more important things in a nutshell. We describe what a compilation is. Unlike an audit, we gather no evidence. Unlike an audit, we gather no evidence. We state that compilation involves only writing the client's financial information up in the form of financial statements. No evidence gathering. Instead, we only write the client's financial information up in the form of financial statements. We give no assurance on the financial statements. So we disclaim any assurance. Number 2, discuss how the compilation report will be modified for each of the following conditions. First of all, the financials do not include adequate disclosure. As I said a couple of weeks ago, way over 75% of compilation reports do not have adequate disclosure, and that's okay. But we simply say in our report that these financial statements omit substantially all the disclosures required by GAAP. Simply say in our compilation report that these financial statements omit substantially all the disclosures required by GAAP. That's okay. As long as we keep the readers of those financial statements will not be misled. So as long as we feel the readers of those financial statements will not be misled. Then B, if the account is not independent, we simply say so in the report. Simply say so in the compilation report, and that's okay. And I'd say at least 75% of all compilation reports include this, not a negative thing. We don't have to be independent because we give no assurance on the financials. We don't have to be independent because we give no assurance on the financials. So, no need. Doesn't matter if we're biased or not, to tell you the truth. Then C, what if the financials materially depart from GAAP or another applicable accounting framework like IFRS? That's okay, as long as we can describe the departure in our compilation report. And we feel financial statement readers will not be misled. So this is okay as long as we can describe the departure in our compilation report. And we feel readers of the financials will not be misled. Number 3, what should the accountant do if he or she subsequently discovers facts which affect the financials? So in other words, we've issued the compilation report, the financials have been issued too. So after that date, we discover subsequent facts. We need to think about whether the financial statements should be recalled or revised. So we need to think about whether the financial statements should be recalled and revised. Sometimes yes, sometimes. Then number 4, What should the accountant do if the financials are accompanied by supplementary information? Supplementary information, for example, could be a table of selected financial data that the clients pulled from the financial statements, but they just have that table there to highlight things. That's common. The answer is we indicate the degree of responsibility we are taking for it, which is usually none. We indicate the degree of responsibility we are taking for it. That's usually none. So any questions there on those cases? All righty. We had some homework from the book. Let's go over to that. And the homework starts on page 819. Let me pull it up here on my screen. Okay. So as far as review questions go, we just had one. And was number 2516. By the way, chapter 25 of the book contains other material that we'll refer to later in the course. Chapter 25 includes a variety of topics, but not in much depth. So I use it for homework, and you can read, if you would like, the pages which contain the material that we're covering. They have just a little bit of information about compilations, reviews, but not enough to get you through the CPA exam. So that's why I have the longer handouts. And if you want something really, really long, you can go with the standards themselves. If you think you'd like to. Not really, no. Very long and very detailed for practice. So in the handouts, I have to get the depth of material just right. I have to go deep enough so that you have enough information for the CPA exam. But if I go too deep and include too much information, then what happens? Information overload, then you won't learn it. So I've got to hit the sweet spot, shall we say, there in terms of depth of information. Enough to get you through the CPA exam, but if later in practice you do reviews and compilations, that's when you'll refer to the much, much, much longer standards. So number 16, the ABSO Corporation has requested the Herb Germany CPA provide a report to the Northern State Bank as to the existence or non-existence of certain loan conditions, also known, by the way, as debt covenants. The conditions to be reported on are the working capital ratio, dividends paid on preferred stock, aging of accounts receivable, and the competence of management. This is Herb's first experience with ABSCO. Should Herb accept the engagement? Substantiate your answer. Well, I would say the Herb can certainly accept it. But actually, whoa, look at something here. I'm sorry, I gave you the wrong one. Okay, no wonder. Thinking that's not the SARS, but later on, we'll see it. Pardon me. With the SARS, we actually had Some much simpler questions here. We had number 1, 2, 3, 5, 6, 8. They were really short and really simple. So let me ask you, do you have any questions about them? I think I can help you. Those pretty understandable. Okay, good. Then we have number 17, some miscellaneous questions about compilation review services. And these are old CPA exam questions. So first of all, a CPA is performing review services for a small, closely held manufacturing company. Closely held, it means their stock is not publicly traded. It's probably held by only a few individuals, like family members. That's closely held. As part of the follow-up of a significant decrease in the gross margin for the current year, so that means sales revenue minus cost of goods sold, that is smaller, the CPA discovers that there are no supporting documents for $40,000 of disbursements. The chief financial officer assures her that the disbursements are proper. And what should the CPA do? Any ideas? Yes. You got it, 2. Modify the review opinion or withdraw from the engagement unless the unsupported documents are satisfactorily explained. You don't want readers being misled, so you want these documents explained. And if they don't explain them, you're probably more likely to withdraw because you get really uncomfortable. Maybe they're hiding something. Then B, which of the following best describes the responsibility of the CPA in performing compilation services for a company? What did you say? 2, good. CPA must understand the client's business and accounting methods and read the financial statements for reasonableness. That's all we do. And C, the standard compilation report includes which statement or phrase? 1, management is responsible for the financial statements, not the CPA. So that takes care of multiple choice questions. Any questions about them? All righty. Then on page 822, we have number 23. Little case here. So 23, SARS contains several procedures that are required when engaged to perform a compilation review engagement. Below are 10 statements that may or may not be relevant to a compilation review engagement. For each of the 10 statements, indicate whether the procedure is to be performed in a compilation or a review. So first procedure is to obtain a written engagement letter. Is that required for a compilation? Actually, it's not. It says should. Is required for a review. Actually, it is. But for a compilation, even though it says should, let's do it anyway. Number 2, understand the client's industry and the nature of the client's business. Would we do it for a compilation? Yes. Review? Yes. Number 3, we'll read the financial statements. clients. We do that for a compilation? Yes. Review? Yes. Then number 4, to design and perform analytical procedures. Would we do that for compilation? No, we won't. A review? We will. Number 5, make inquiries to the client's management. Would we do that for a compilation? Briefly, we could say yes, very briefly. But for review, we do. That's where it'd be in depth. Number 6, to perform test controls. No. No compilation, no review. Audit, yes. Assess fraud risk? No. No for both, but for an audit, yes. Number 8, to obtain a letter of representation from management. We do that for a compilation? No, because we gather no evidence. And we do not give an opinion. For a review? Actually, yes. Then number 9, to prepare documentation in sufficient detail to provide a clear understanding of the work performed. Would we do that for a compilation? Yes. Review? Yes. So just remember, in every type of professional service, even non-accounting services, the mantra should be document, 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 so that we always know what we did. For example, I'm building this building, RADA construction, general contractor. You can bet they've kept all kinds of documentation right down to how they comply with OSHA, occupational safety and health requirements, just in case they ever need it. And in today's litigious society, meaning people like to sue, litigation, documentation has become more and more and more. And since the electronic these days, easier to do than on paper. Doesn't take up the vast storage area the paper does. Then number 10, to issue a report that contains limited assurance, that means negative assurance, about whether the accountant is aware of the need for material modification to the financial statements. So this limited or negative assurance keys us in. That would be which type of engagement? A review. You got it. So any questions there on that problem? Right, good. Compilation reviews are pretty straightforward. Now, as far as other stuff not stuff I have to go over, but the write-up of the Mintz and Morris case, I realize some of you don't have that book yet. That's okay. I'm not going to enforce the deadline. So just do it and post it on Canvas when you get to it. Most of you have already done it. Gleim is a little bit behind on compiling our assignments. So assignment 1, well, again, I'm not enforcing the deadline on that, or assignment 2 for that matter either. They won't take you long to do. Just some multiple choice questions. In the case of assignment 1, just some review questions about audit reports. The Gleim information that you get will also include all kinds of other material on each of the topics, like a lot of other material on audit reports. It's good to read over if you have time. It's very good in preparation for the CPA exam. So I hope you'll have a chance to do that. Maybe not right away, that's okay. And then we had another Gleim assignment number 2, due September 24th. Again, I'm not enforcing the deadline. So I'll let you know when Gleim completes things. So, yes. It's in the Minson Morris book. Minson Morris book. It's a separate book. Yeah, yeah. It's that Minson Morris. Okay, cool. You got it. Good. Exactly. No problem. And your addition is probably going to be Diamond Foods. So just do that instead of the audit report. Just for yourself. Yeah. And so the files, oh, the handout cases. Yeah, so the handout cases, right? Just do those for yourself. You ready? You bet. What else do you have? And by the way, throughout the term, as you do assignments, they will be posted to the Canvas gradebook. Just do me a favor and every now and then review that Canvas gradebook. It will include assignments, including my accounting lab, which is supposed to sync with Pearson's My Accounting Lab, although sometimes there are some issues there. So if something looks strange on the gradebook, let me know, okay? I mean, technology is a good thing, but human involvement still needs to be there. So if you see something strange, just let me know. I'll fix it.
The only thing I got is the grades show up.
Mhm.
The grades show up, but then they don't come until on a calendar or a paper. Like, it's not a big deal, but I just want to put it out there.
Thanks. Gotcha. Sounds like an upgrade Canvas needs to make. Yeah. Ideally, they would. That's weird that they don't do it. That'd be really handy. So maybe I can suggest that to Canvas. But that would be good. That way you just see at a glance what you've done, what you still need to do. Okay, thanks.
We study some line and recommended comparing to the schools of love or from the CCA exam.
Or I'm sorry, could you show?
You said we could go ahead and like read these, right?
Oh, the yes, the study.
So this would be the CCA class.
So one study units, you can go ahead and read them, the outlines they have. And some of the information certainly does tie into this class. And they'll have a lot of extra information in there too. So if you are reading them, just concentrate on the information for this class, although my handouts will be sufficient. For the other information in the line, it's really good in those line outlines. And preparing you for the CPA exam, but you don't need it for this class. That makes sense. Anything else so far? Yes, Lisa. Correct. They will be soon. So I'll let you know when they are. They won't take you long. Just some multiple choice questions. Anything else so far? Yes. I'm just using some of the material. Need to clarify. Yes.
Sorry,
Sorry, Katie.
one more information more. 537 of chapter 1, page 567.
No, that's chapter 5, case 7.
Oh,
Because they're hyphenated like that.
sorry.
No
Alright.
problem, Katie. Anything else? All right. Well, that brings us over to the topic for today. Looking here on the handout, our topic for today, statements of standards for attestation engagements, or the so-called SSAEs. You ever notice in accounting that whenever you have something like that, there's always an acronym. So it's kind of a challenge trying to remember what the acronyms stand for sometimes. So we'll discuss information about attestation engagements today. So what are they? They're engagements that are reflective of audits, reviews, and compilations. Their engagements are reflective of audits, reviews, and compilations, but they are not necessarily on historical financial information. For example, in audit, we audit the financials. The information just happened over the past year. That's still historical, it's in the past. But instead of a compilation, we might do an examination, which is like an audit, I'll get that term in a bit, of prospective financial statements. Prospective financial statements trying to depict the future, like budgeted financial statements. So not of historical financial information for the most part. Attestation engagements aren't, but they're still rather similar to audits, reviews, and compilations. So as I mentioned before, we have these in a variety of circumstances. For the Miss America pageant, that's PwC, they observed the balloting. They make sure that everything was done in accordance with the Miss America pageant's rules. And they give an attestation report that says so. By the way, attestation simply means a written report. And a lot of reports in attestation. For all lotteries, there will be a CPA firm observing them and making sure that everything was done in accordance with the Lottery Commission's rules. For the Olympics, that's EY, my old firm. They made sure everything was done in accordance with the Olympic Commission rules. Of course, in Tokyo, how successful were those Olympics? Not very. No. Yeah, just didn't generate too much excitement. Having cardboard people in the audience instead of real people, etc. The Grammys, the Oscars, again, all attestation engagements. But if we didn't have a CPA doing an attestation engagement with these things, somebody would say that rigging is going on. For example, the Miss America pageant judges, that was rigged. The lottery drawing, that was rigged too, because my numbers didn't come in. So that's why we have a CPA there, to get some assurance that things are really okay. But we must say we're very trusted people, so that's good. These are both okay in the way of markers. And if you're watching this online, let me go ahead and stop my share. Just test out my markers there, my little squiggly lines to make sure they're okay. So as we go through the attestation standards today, we're going to see 4 different types of engagements as we do. The top form of engagement is called an examination. And it is, I mark up my board space so I can allot it here. Actually, let me go over here to this next pane. As we go about, good, have my space allotted, which is really important when you're teaching online. The 4 types of engagements we will see. At the top of the food chain is an examination. So an examination is similar to an audit, just not historical financial information. We do the most work there. We do gather corroborating evidence. And we give a report, which gives positive assurance. So it would be, in our opinion, the Miss America pageant balloting was done in accordance with the commission's rules. Highest level of assurance, positive assurance. Of course, the most money too, highest fees. Then, not surprisingly, a notch down is a review. For those pens, it's really, really good. So for review, not surprisingly, well, limited evidence gathering, namely inquiry and analytical procedures. Limited evidence gathering through inquiry and analytical procedures. And we give limited or negative assurance. Limited, also known as negative assurance. So less than an examination, and since there's less work, the fees are less too. And the next one won't be too surprising either, a compilation. We can only do these in a couple of different places. So just like in the compilations we've seen on historical financial statements, we're just going to take some information from management and write it up. We will give no assurance. Take some information from management, write it up, and we'll give no assurance as we do. And it's the cheapest of these 3. Now, there is a 4th type of engagement that we'll be seeing for the first time. It's called agreed upon procedures. And I can't really put in the context of positive assurance, limited assurance, or no assurance. I can't do that hierarchy because we're going to see that the report simply takes the form of a list of procedures we did and the findings for each. So agreed upon procedures. It's doing badly. So agree upon procedures. We can abbreviate that. Well, let me try to set a marker. AUP. Or agree upon procedures. Again, a list of procedures we did and the findings for each. It's the most popular form of these 4 engagements because client gets done only what they need, no more, no less. So they feel like they're in control of the fees, which is true. So we'll see those coming along the way too. Let's see. I got for the last time I tried this last time, what we need more. How many of you would like to hand out AT 101, which is the very, very first standard? We'll say it first. Anybody need a copy? Anybody else? Good. And just enough. That's good. I was efficient. So AT 101. And if you're watching this online, I'm going to go back to sharing my screen. So the attestation standards. Well, we see that the information that we're going to be discussing in this handout come from 3 different SSAEs, 3 different statements of standards for attestation engagements. But so that we don't have to go through a whole bunch of different standards, the ICP has codified these according to AT sections. AT standing for attestation, just like AU stands for audit. So here in AT 101, we've got the basics. Basics of attestation engagements. So we have here a little introduction. So AT 101 lays the groundwork for the later standards. It covers 3 types of tests for attestation engagements, terms being the same. Examinations, reviews, and agree upon procedures. No compilations in this one, they come later. It also covers some basic standards for attestation engagements. We'll compare and contrast these generally accepted auditing standards. They're based on those. And this section defines the attestation engagement. Here it is. It's one in which a practitioner is engaged to issue and does issue a written communication that expresses a conclusion on the subject matter or on some management assertion about the subject matter that's the responsibility of another party. That latter is not too common. Well, thus the CPA will be comparing the client's assertions about virtually any subject to criteria which are available and suitable for all users. And that's a major difference from management, advisory, or consulting services. Sometimes the line is fine between those and attestation engagements. But in a management consulting service, we do not use external standards to judge things against. We use our own internal standards, shall we say, our judgment about what's right, to give the client advice in doing things better. In attestation engagements, there are external criteria, just like the Miss America pageant rules. And we just see if the organization followed the rules or not. Well, then in C, the Attestation Standards concern just about anything other than traditional historical financial information, because that's covered in audits. However, we can see some examples of services which are not considered to test engagements in the beginning of the standard. Most notably, these are giving a legal conclusion. We never do that. We never give a legal conclusion, because which group would get upset over that? Lawyers, attorneys, yeah, stepping on their toes. So we never give legal conclusions. We never vouch for the achievability of some forecast. Like, here's the budget income statement for next year. It's really a forecast income statement. We'll never say that we think that will come true. Because might not, we get in trouble. And third, we never comment on the competence of some party. We just saw in one of the homework questions, the competence of management. We would never comment on that. So we wouldn't say, for example, do we think this management team is fit to run the company? Just can't go there. Then D, a test engagement may be a part of a larger engagement. For example, we could do an audit and do a test engagement. But the difference is we're going to have to give two separate reports. So give two separate reports so we clearly delineate those two engagements. And E, just a reminder, document. So attestation, documentation must be maintained, working papers. Now, the Deonstation Standards, they're all based on some general precepts, just like generally accepted auditing standards. In fact, these precepts are based on GAS. So they're in AT 101. They're a lot broader than GAS because they apply to a wider variety of engagements. We don't need to go through them, but I'd like to show you some additional differences in attestation standards versus auditing standards. Well, first of all, in attestation standards, references to historical financial statements and GAS are omitted. Auditors replaced with practitioner, that's the accountant, CPA. Engagement replaces examination. It's not necessarily doing examination, we could be doing a review, a compilation, or agree upon procedures. Then number two, the general standards are expanded. This is because once the subject matter of attestation extends beyond historical financials, there's a need to determine just how far this extension of attest services can and should go. So what can we comment on? What can we not comment on? So again, never on the competence of some party, never on legal conclusions, never that we think some forecast will be achievable. Another thing I can add here is that we should never comment on something which is outside our area of expertise. So if we're not an expert on it, don't comment. See that coming up. Then number 3, the second standard of fieldwork is omitted. And this standard applies to the audit or study and evaluation of internal control. Well, we do that for an audit, but that's not necessarily a part of an attestation engagement. Then second and third standards for reporting are omitted. Those refer to the consistent application of accounting principles and informative disclosures. We're not necessarily doing even financial information in attestation engagement, so that's why. Then 5, GAP is not used as a set of criteria. Instead, the practitioner shall perform the engagement only if he or she has reason to believe the subject matter is capable of evaluation against criteria that are suitable and available to all users, like again, the Miss America pageants rules. And number 6, these differences also allow attestation engagements to cover engagements in which there is less than positive assurance provided. So we're not necessarily doing the examination with positive assurance. Instead, we might be doing a review, a compilation, or agree upon procedures. Then number 3, this section concerns 3 types of engagements. Well, first of all, an examination. So again, we express positive assurance and opinion that the subject matter is based on or is in conformity with the criteria in all material respects. Or we could do it for an assertion, don't worry about that. But it's also in all material respects based on the criteria. We don't worry about little differences, just the big stuff. Then second, just like in an audit, the report may be qualified or modified for some aspect of the presentation or the engagement. So if something's wrong, we bring out why. And also, as we said, an examination involves the greatest amount of evidence gathering and risk, and therefore the highest fees in general. So clients only get them if they have to, because they're relatively expensive. Then reviews. As we know, we express negative assurance by stating whether any information came to his or her attention on the basis of the work performed that indicates the subject matter is not based on or is not fairly stated in all material respects based on the criteria. Again, don't worry about the assertion. As with SARS reviews, there's much less evidence corroboration than an examination. So it's cheaper than an examination. Then number 2, the subject matter is not modified to correct for any such information, which comes to practitioner's attention, then the information should be described in the report. So if something's wrong in the Miss America pageant balloting, they didn't quite follow the rules, we'll bring out in our report what happened. Then third, the report will indicate the work performed was less than scope than an examination and will disclaim a positive opinion on the subject matter. So much less than scope than an examination, and we don't give an opinion. We don't give positive assurance. And then C, agree upon procedures are allowed. And it just mentioned those in AT 101. The AT 201 gives a lot more guidance. And just some other. Again, practitioners should always maintain adequate working papers or documentation for attestation engagements, just like in an audit. Always adequate engagement documentation, working papers. So again, the mantra, document, document, document. And then B, if an attestation engagement is related to a management advisory service engagement, the attestation standards apply only to the attestation engagement. The attestation report should be issued separately and clearly identified, just as we would do it and as if it were connected to an audit too. So that takes care of the first attestation standard I will worry about today, AT 101. Any questions there on AT 101? Right. Well, after AT 101, we got AT 201. So, yeah. Exactly copies I need. And those weapons. Last time I taught this course, which was a year ago, so. Oh. Pull that down and get rid of the fog on my glasses. Glad my finally cleared their contacts again. Shouldn't be too long. So AT 201 here, these agree upon procedures. As we said, these are the most common type of engagement. As client gets done what they need, no more or less. They feel like they control the price. So we'll talk about these some information on real shortcut. Let's see an introduction here. In agree upon procedures and engagements, the specified parties, that would be the client and anyone else, like a bank. The report do not require an audit under that, certainly not. Instead, they just need the account to perform only certain procedures. And the report findings, he or she is independently derived. So list procedures and findings and specified users, and the account will agree upon procedures to be performed. So again, client gets done only what they need, no more, no less. And then B, this section provides guidance for all agreed upon procedures and engagements except for the following. First of all, I don't know if you remember this way back in Auditing 1, but we had a report on specified compliance requirements based solely on audit financial statements. And it was called Supplementary Compliance Report. Anyway, that's not a part of this. Don't worry about 2, don't worry about 3. 4, back in the first course, we had letters for underwriters. Again, that's something different. Number 5, professional services, which are not considered engagements, falling under SSAE 10. Most notably, consulting services and tax work. Don't worry about 6. Well, then, Roman numeral 3, a description of agreed upon procedures and engagements. So first of all, the type of agreed upon procedures and engagement covered by this section is that in which the accountant and the users of the report or specified parties, again, like client and the bank, agree upon procedures which will serve specified users' needs regarding a subject matter. And even though the accountant and specified parties must agree upon the exact procedures to be used, specified parties must take the ultimate responsibility for choosing procedures. For obvious reasons, the accountant does not want to make that decision. So we let them decide, not us. Otherwise, we would be blamed. I mean, we can talk to them about them. And here's what we feel might be a good procedure to do, but they've got to make that final decision. And as we mentioned, agree upon procedures often serve users well because procedures can be tailored to the user's needs. And the procedures may be as limited or as extensive as specified parties desire. And the accountant can help specified parties agree upon procedures, like I said, through such means as meeting with them or drafting a copy of the anticipated report or studying the written requirements of specified parties or reviewing relevant controls or correspondence. And all these proposed procedures should be clearly specified in an engagement letter. You shouldn't do an engagement without one of those letters. So here's what we'll do. Again, no more, no less. We'll do the procedures and we'll tell you the findings. Then agree upon procedures do not constitute an audit. Definitely not. Thus, no audit opinion is issued. And if we had to say instead, the accountant's report is simply going to be in the form of the procedures and the findings. A negative assurance is not appropriate. We don't give that either. So I don't know what to call the assurance level provided, except, well, just procedures and findings, that's all. Now, in the way of generally accepted auditing standards, they did borrow 3 things from them. From the general accepted auditing standards, we've got to have adequate technical training and proficiency. We've got to be independent because we want unbiased findings. We've also got to exercise due care, do professional care, do everything we should, do it right. And then from the fieldwork standards, we've got to plan and supervise this engagement. Plan the engagement and supervise any assistance. Indeed, since specified parties are responsible for the engagements or for the procedures rather to be used, they're also responsible for the nature, timing, and extent of those procedures. And they also assume the risk they might misunderstand or inappropriately use the accountant's findings. We say that because we, the accountants, we don't want to get blamed. So the blame is on them, not on us. You can see how through many years of the accounting profession, they limit their responsibility. Benny, what are we responsible for? Well, the accountant's responsibility is to carry out those procedures and agree and report the findings in accordance with this section. We'll see that report in a bit. And the accountant's risks can be reduced by playing supervision and due care in performing the engagement and preparing the report. By the way, the accountant has no responsibility to determine any differences between the agreed upon procedures and the procedures he or she would have determined to be necessary had he or she been engaged to perform another form of engagement. For example, we don't have to say, well, we would have said an examination. Then F. Even though the agreed upon procedures may be quite limited, they must be more than a mere reading of an assertion or specified information. The accountant must also avoid agreeing to procedures which are overly subjective and are thus possibly open to varying interpretation. So examples of such terms are general, review, limited review, reconcile, check, test. Instead, we need to have more specific engagements. Don't worry about that example. And also, as I've said, the accountant should not agree to evaluate the competency or objectivity of another party. I should really add here that we must also not give legal conclusions. Vouch for the achievability of a forecast. And G, it's okay for us to have assistance from any specialists if we need them, or internal auditors. At H, adequate engagement documentation. Those working papers must be maintained. So again, document. And working papers should show that the work was accurately planned and supervised, and the sufficient evidence was obtained to provide a reasonable basis for the findings of the accountant's report. Not surprising. Any questions so far? Well, then reporting, here is what should be in the report. So required parts. First of all, a title, which includes the word independent. We could put report of independent accountants, that would be just fine. Independent must be there. Then we'll identify the specified parties like client name and bank name. Then third, we'll identify the subject matter and the character of the engagement. So for example, the Miss America pageant for 2021. And the character of the engagement is agreed upon procedures. For the basis of accounting use, unless clearly evidenced, for example, GAAP. But in the case of most attestation engagements, we don't have a basis for accounting. Miss America pageant has none. If it did, we would so state. Then fifth, the statement the procedures performed were those agreed to by the specified parties, and that the specified parties are responsible for the subject matter of the report, not the accountant. And number 6 will reference the attestation standards established by the ICPA. So we never say generally accepted auditing standards. Never say GAS. Number 7, a statement that the sufficiency of the procedures is solely the responsibility of the specified users, specified parties, and a disclaimer of the responsibility for the sufficiency of those procedures. Just Just change that system. So the accountant assumes no responsibility for whether those procedures are enough. Number 8 is really the heart of the report. It's a list of the procedures performed and the related findings. Again, negative assurance should not be provided. For example, in the case of lottery drawings, the CPA observes that each of those ping pong balls is weighed, and each one weighed exactly the same. Because otherwise, somebody's going to allege that those balls didn't all weigh the same. And therefore, some were more likely to be drawn than others. And that's why that person's number did not come up. Then number 9, when applicable, a description of any agreed upon materiality limits. So don't sweat the small stuff, just material things. Number 10, a statement that the accountant did not perform an examination of the subject matter. A statement that if the accountant performed additional procedures, other matters may have come to his or her attention. It would have been a report. We're not responsible again. Specified parties and the user are. Number 11, a disclaimer of opinion on the subject matter of the report. So we don't give an opinion. We don't give positive assurance. Let's make that clear. Number 12, a statement restricting the use of the report to specified users. However, if the report is public record, then the account should instead include this statement. However, this report is a matter of public records and its distribution is not limited. Otherwise, these are not available for general use. Number 13, where applicable, any reservations or restrictions concerning the procedures of findings. If we have something that we're not too sure about, we've got some reservations about, let's spell those out. Number 14, where applicable, a description of assistance provided by a specialist. Number 15, if the engagement concerned prospective financial statements, those are about the future. We'll see them in a bit. So financial statements depicting the future. Following should be added to the report. And where applicable, those reservations or restrictions concerning procedures of findings again. And then B, a caveat or warning that the prospective results may not be achieved. So again, we never vouch for the achievability of something in the future. And C, a statement the practitioner assumes no responsibility to update the report for events and circumstances occurring after the date of the report. So subsequent discovery of fact, we don't have to worry about those. And B, the accountant may still add any explanatory language about any matters they would like. So anything we wish to talk about, we can. All it's the same thing. Now in C, let's say there's a scope limitation. We could not examine everything we wanted, could not examine all the evidence we wanted. So any limitations on the scope of the accountant's procedures will warrant either description in the report or withdrawal from the engagement. And if management impose those limitations, we'll probably withdraw because it sounds like they've got something to what? Hide, you bet. Now in D, the accountant may obtain written assertions from the specified parties. Those could be in the form of a representation letter or some other written communication. So in other words, if specified parties tell us some information is true, let's get it backed up in writing. It says we may obtain this if we look at the standards, but in practicality, let's obtain it. We must. This way, we're not responsible for those things and we can prove it. So again, that's not required. It's left up to the accountant's judgment. If one or more parties refuse to provide a representation letter, the accountant may either disclose that fact in the report or withdraw from the engagement. That's more likely. Again, it sounds like they've got something to hide, or change the engagement to another form of engagement. There's some guidance as to that one, but that's not too common. So that takes care of the material in AT 201. Any questions about that material? Yes, Danny.
What to insert, what would you include in a forward based on the term used on the evidence? If we don't necessarily kind of have to for instance, saying there's no basis.
No, we just wouldn't mention, just leave it blank. Yeah. Because there's really no accounting in the sense of dollars in that case. Anything else? There is a handout case here, and just do that again for your own enlightenment. You don't need to turn it in. This has a solution to it. I did this a number of years ago for a continuing professional education session that I did for the FICP in Fort Lauderdale. So I wanted to give them something to take home and they could check their answer. So that's where this has come from. Way back when AT 201 first came out. So again, any questions there? Okay. Watching this online. I'll stop my share here. Just a moment. So the next thing we will have is AT 301. Now, financial forecasts and projections. Who needs a copy of this in? So this is a PDF. And I'd say the file, and of course it is also on Canvas for you. So AT 301, financial forecasts and projections. We're trying to predict the future here. So it's about the future. We know that as an accountant, we will never vouch for the achievability of something. We'll never say this financial forecast for net income for next year is going to really happen. Financial forecast projections, by the way, are prospective financial statements. So again, trying to look to the future. So let's see what we can do with those. Let's come on down to applicability. So the accountant should report when the accountant submits to the client or others prospective financial statements to the accountant. Is assembled or assisted in assembling and also believes prospective financial statements might be used by a third party. So that's when we can report on them. Some things I'm skipping. Don't worry about the rest of that. Let's come on down to descriptions of terms. First of all, prospective financial statements. Well, these are financial forecasts or financial projections. We'll see the differences between the two in a moment, including summaries of significant assumptions. We'll see those in a moment too, and accounting policies. And prospective financial statements may cover a period that is partially expired. So in other words, there could be some historical financial information in there too. For example, here for 2021, we might have prospective financial statements that cover historical information through September and future information for the last quarter of the year. Following are non-prospective financial statements. Statements for periods that completely expired. Those are regular historical financial statements. Not talking about them here. Then second, pro forma financial statements. We'll see those in the next section. Or partial presentations. They omit some normal part of financial statements. We'll see what those parts will be in a bit. So they're incomplete. Well, again, two types of prospective financial statements. One type there would be a financial forecast. So prospective financial statements that present to the best of the responsible parties' knowledge and belief, like the client, and entities, the company, expected financial position, that's balance sheet, results of operations, that's the income statement, the statement of retained earnings, and cash flows, statement of cash flows. So they would have those financial statements there, except about the future. It's based on the responsible party's assumptions about conditions they expect to exist, and the course of action it expects to take, like what they think the inflation rate will be for next year. A financial forecast may be expressed in specific monetary amounts, as a single estimate of forecasted results, or as a range. Either one is okay. And then financial projection. Prospective financial statements to present to the best of responsible parties' knowledge and belief, given more and more hypothetical assumptions. As an entity's expected financial position, results of operations, and cash flows. Ordinarily is expected to answer the question, what would happen if? Like, what would happen if the inflation rate were 3% next year instead of 2%? Ordinarily is, and then a financial projection may contain a range again. So a financial forecast, we think the most likely inflation rate for next year is 3%. But if we want to say what if the inflation rate were higher or lower, those financial statements answer whether it's higher or lower will be financial projections. Entity, that's normally a for-profit company. Then hypothetical assumption, an assumption used in a financial projection to present a condition or a course of action that may not occur, but is consistent with the purpose of the projection. So again, for example, we think the most likely inflation rate next year will be 3%. Responsible party, that's usually the client. Assembly, it means we put the financial statements together, we compile them. Then key factors, significant matters on which an entity's future results are expected to depend. Key factors encompass matters that affect items such as sales, production, service, and financing activities. And they're the foundations for prospective financial statements, the basis for assumptions like the inflation rate is a key factor. Then we've got general use or limited use of prospective financial statements. General use means available to the general public. So available to the general public, and know that last sentence, only a financial forecast is appropriate for general use, not a financial projection. Then limited use, restricted use, not available for public consumption. So restricted to certain parties. And know the last sentence, financial forecasts and projections are both appropriate for limited use. Then compilation of prospective financial statements. Well, that's professional service that involves first assembling prospective financial statements. We put them together, just like we do historical financial statements in compilations we've seen. Then we'll perform required procedures, which will include reading the prospective financial statements and the accompanying summaries of significant assumptions like the inflation rate of 3% and significant accounting policies like LIFO or FIFO if applicable, considering whether they are presented in conformity with the AICPA professional guidelines. We'll see those in a bit, are not obviously inappropriate. So they're not going to mislead readers. Then we'll issue a compilation report. That will give no assurance. So we disclaim assurance on prospective financial statements if we compile them. So a compilation is something we can do. And we see that a compilation does not provide any assurance again that the accountant will become aware of significant matters that might be disclosed by more extensive procedures, such as those performed in an examination of prospective financials. So we can do a compilation or we can do an examination. An examination is next. Examination, know that we give positive assurance, the highest type, and we gather evidence. Fundamental requirements, let me just see what I need to go through here. We said that there were some minimum things we should present. Here they are. You don't have to memorize this list, certainly. But those are the normal things on historical financial statements. If not all of those items are on the prospective financial statements, we have what's called, we saw this term earlier, a partial presentation. Hopefully clients don't do that to us because oftentimes we cannot give a report on that. So prospective financial statements should really look like normal historical financial statements, have all the usual parts. Otherwise, we have a partial presentation. We may not be able to report on that. This goes into overkill. So we have compilations, examinations. By the way, with examinations, we can give an unqualified opinion. We think everything's fine. Or a qualified opinion. we think something's wrong, or an adverse opinion, or a disclaimer of opinion. Those are just like an audit. So again, just like an audit, we could give an unqualified opinion in this examination, or a qualified opinion, or an adverse opinion. That's bad. We think these prospective financial statements are really messed up. Or a disclaimer of opinion, we cannot give an opinion. Most common reason is we are not independent. Speaking of independence, we must be independent to give an examination. We do not need to be independent in a review. So examination like an audit, yes, we must be independent. Compilation, we don't have to be. And a third type of engagement that we can do, agree upon procedures for prospective financial statements. But just like the agree upon procedures we saw in AT 201, a list of procedures and findings. That's why I need to cover from AT 301. And this little test your knowledge, just read over those as part of homework. They've got the answers there for you. Any questions here so far? Well, the next thing we have is AT 401, reporting on pro forma financial information. Pro forma, by the way, means as if. So as if something happened or didn't happen. So for example, here at Florida Southern, a couple of years ago, we also bought for a very low price the art museum near the library on Lake Morton. Well, that art museum does have its own financial statements, which are then consolidated in financial statements of Florida Southern. So pro forma financial information could be, well, what would Florida Southern's financial statements look like as if we did not own that art museum? So let's just take the art museum's financial information out. Then we have a pro forma financial statement. Now, some companies got really in trouble with these because they took out the bad stuff. Happened a number of years ago. Enron did a lot of that too, by the way. So we don't want that. So pro forma financial information these days, it's very restricted, shall we say. We cannot mislead anyone. So a few things I need to cover from this. Well, definitions of terms. First of all, pro forma financial information shows what the significant effects on historical financial information might have been had a consummated or proposed transaction. Oh, and I just saw something here. I need to share my screen. I'm sorry for those of you watching this online, but you can follow along okay, of course, on the handouts. So pro forma financial information again shows what the significant effects on historical financial statements might have been a consummated or proposed transaction or event occurred at an earlier date. So we adjust historical financial statements for pro forma adjustments. Then some fundamental requirements. So conditions for reporting and the account's objectives. Well, first, an account may either examine or review pro forma information. All three of the following conditions are achieved. So we can do examinations or we can do reviews. Guess what? An examination includes an opinion, namely positive assurance, a review, limited or negative assurance. Which one do you think is more popular? Review. And why do you think so? Cheaper. Yep. So first of all, the document, including the pro formas, also includes complete historical financial statements or incorporates them by reference. So we could just say to the reader, you should be reading the 2021 full set of financials. The entity for the most recent. If the pro formas, don't worry about the interim period there. Then second, the historical financial statements on which the pro forma information is based have been audited or reviewed by an accountant. A little note there, the level of assurance on the pro forma should be no greater than the level on the related historical financials. So if those historical financials were only reviewed, then we can only do a review on pro forma financial statements. And then third, the accountant reporting on the pro forma information should have an appropriate level of knowledge of the entity's accounting and financial reporting practices. And it says generally this knowledge will be the result of having audited or reviewed the historical financials. And if the accountant had not been the auditor or reviewer of the historical statements, the accountant should consider whether under the particular circumstances he or she can acquire significant knowledge or sufficient knowledge rather. Then engagement objectives. So examination. The objective of the examination is to provide reasonable assurance that, and by the way, we will give an opinion or positive assurance about all three of these things. First of all, we'll say we believe the management assumptions provide a reasonable basis for presenting the significant effects of the underlying transaction or events. Number two, we'll say that we believe the pro forma adjustments give an appropriate effect to the assumptions. Number three, the math is okay. The pro forma column, meaning historical information modified by adjustments, reflects proper application of the adjustments. The math is okay. So again, we give positive assurance or an opinion about all those. A review, we give negative or limited assurance about all three of those. A review, we give limited or negative assurance about all three of those. Report modifications coming on down to that. We'll modify if necessary. Just know that. Finally, test your knowledge. Just answer these three. And the answers are there for you. Any questions there about pro forma financials? Okay. While I'm adding this handout, I'm just going to go over to AT 701. Just see what I need to say about this. Management discussion analysis, also known as MD&A. MD&A, it's a required part of Form 10K. And it's management's narrative about their operations and the results from those operations and their narrative about the financial statements. So management's narrative about their operations, what they do to earn money, the results of those operations, and the financial statements. So a required part of Form 10K, we also see MD&A in other areas. For example, city and county governments must also issue MD&A. So the government must talk about the same things. You're taking governmental accounting. How many of you are right now? Okay. So MD&A in the CAFR, Comprehensive Annual Financial Report. So management just has a chance here to discuss things to the rise. For example, what were the effects of COVID this year on their operations? With MD&A, this type of report is optional. The attestation report is optional. So not many clients get these done. That means they don't ask a lot about these on the CPA exam and we can shortcut stuff. But if management elects to have the accountant go over MD&A, there are two types of reports that can be issued. Or I should say two types of engagements, along with the reports can be issued. One type of engagement is examination. And in that, we will give a report which gives positive assurance that everything said in MD&A is consistent with financial statements. So in an examination, we will give positive assurance that we believe, in our opinion, everything said in MD&A is consistent with the financial statements. We do not want a discrepancy. The other type of engagement we can do is a review of MD&A. There we give negative or limited assurance. Everything said in MD&A is consistent with the financial statements. And a review, of course, is cheaper. We don't gather as much evidence as we would do in an examination to make sure the MD&A will be okay. Okay, and three little questions there about test your knowledge. So just do those as part of your homework, and that takes care of AT 701. Any questions there about AT 701? Writing? I'll stop my share here for a minute if you're watching this online. All right, we've covered a lot of stuff here. Make sure that I had something in the email I sent you. Bear with me a second. Oh, good, I did. Okay, two more of these to go. And one will be AT40. Whoops. 401. Okay. Okay, the file says AT401. This says 501 here. That's a typo. That should be AT401. Pardon me about that. AT401. So reporting on an entity's internal control structure over financial reporting. I can summarize this one really, really easily and briefly. You know how in an audit of an issue, publicly traded company, we must do an audit of internal control. Gotta do that. We've got to do a so-called 404 report or section 404 of the Sarbanes-Oxley Act. So what we do is we audit internal control. We could say we examine it in attestation terms. So this standard here is where that audit of internal control came from. This standard was developed before the Sarbanes-Oxley Act. So there's very little we need to say that. So just like an audit of internal control, we gather evidence that internal control is working okay. And then we give a report that says, in our opinion, internal control is working okay, namely that it conforms to the standards issued by the Committee of Sponsored Organizations, or COSA. We think internal control is okay. Give an opinion or positive assurance about it based on this audit of internal control and how it gets to an examination. Now, the standard is still in place. Here's why. If we have an entity that is thinking of going public, it may want to do a test run of its internal control. It may want an examination of internal control. It's optional. Before they go public, before they start trading their stock, just to make sure that everything's okay. So do that trial run. This way it doesn't really count. But if they go public and they have this 404 report, then that does count. So let's get any problems with internal control out of the way before we go public. So in a nutshell, that's all you need to know about this standard. Everything in here, well, we've really covered, or at least what we need to cover back in auditing 1. Okay, good. And if you will, do this discussion case here for homework, and we'll discuss it in 2 weeks. So good, have a short, sweet, and simple. Any questions on it? Final thing we have, we made really good time, is compliance attestation, AT 601. How many of you need a handout for that? 1, 2, 3, 4. Good, I've got exactly. scan through this a second. And if you're online, let me share my screen again. So here, compliance attestation. Management is saying we complied with something. Well, if we are the accountant, we come in and we say, yeah, they complied. We'll gather evidence back. So let me show you what I mean. So introduction and applicability here. First of all, this section provides guidance for engagements for, first of all, an entity's compliance with requirements, specified laws, regulations, rules, contracts, or grants. In other words, we complied with specified requirements. So if we got a grant here at Florida Southern from, let's say, the National Endowment for the Arts, we will show how we complied with everything they said we should. Because whenever anyone gives you some money, guess what? All kinds of compliance requirements come along with it. Same thing with student financial aid. And then second, about the effectiveness of an entity's internal control over compliance with specified requirements. The internal control over compliance, well, it's not just enough to show that we really complied with everything, but we also must have sufficient internal control in place so that we make sure we keep complying. That makes sense? So if we have poor internal control, not good. And B, these compliance test engagements may relate to compliance requirements, which are either financial or non-financial in nature. And they should comply with the attestation standards. So, yes, we can talk about compliance with financial things. But for that matter, a lot of compliance is non-financial. But accountants should be able to do both. And increasingly today, as I've said before, we don't just account for numbers, but we also account for compliance too. Kind of a natural outgrowth of accounting for numbers. Don't worry about C. D, we should know the compliance attest reports do not provide any sort of legal conclusions. Never do. Never give a legal conclusion because attorneys will get angry. So 2 types of engagements are possible. Examinations and agree upon procedures. Whoa, why did I just do that? Either may be used to evaluate compliance. Well, which one do you think is going to be more common? More common choice. You bet, agree upon procedures. And reviews, and I just add in compilations, they're not acceptable. B, I just remind you that agree upon procedures engagements are usually more common. C, if an examination engagement is to be performed, the practitioner should consider attestation risk. I'll talk about that later. But basically the risk, we see everything's okay, when in reality, not everything is. And also, if the practitioner is engaged to examine management's assertion about internal control, structure over compliance, the practitioner cannot accept the engagement unless management uses reasonable criteria which are suitable and available to all users. For example, internal control is usually in accordance with COSO standards. Committee-sponsored organization standards, you've heard that term back in the first auditing course. And those are the gold standards for good internal control. So we need some set of standards or criteria. Again, normally close. Shows how internal control should work. The conditions for engagement performance. So following conditions must be met before either examination or agree upon procedures engagement can be done. Now, this one's not surprising. We've seen it lots of times before. Management accepts responsibility for the entity's compliance with specified requirements on the effectiveness of the entity's internal control over compliance. So management says, yes, we're responsible for internal control. The accountant is not. And then second, management evaluates the entity's compliance with specified requirements or the effectiveness of the entity's internal control structure over compliance. So on a periodic basis, management evaluates how well they comply with COSO standards. They don't just wait for the accountant to come up once in a while and do it. B, in addition, in examination engagements, sufficient evidence exists or could be developed to support management's evaluations. So as always, in an examination, we must gather evidence. And skip Roman numeral 4, just know that management is responsible for internal control and for compliance. Additional guidance for agreed upon procedures engagements. While the agreed upon procedures may be as limited or as extensive as specified users desire, as long as the specified parties participate in establishing the procedures to be performed and take responsibility for the adequacy of those procedures. That's up to them. Not surprising. We've seen that before, and we saw B before. The practitioner is under no obligation to perform procedures beyond the agreed upon procedures. However, if non-compliance comes to practitioner's attention by other means, we just happen to find out, the information should be reported in the report. C, we've seen this before. Practitioners report in the form of enumerating procedures and findings. We don't give negative assurance, or for that matter, we don't give positive assurance either. All these items we've seen before. Then, additional guidance for examination engagements. Well, the objective of an examination engagement is to express opinion about the entity's compliance with specified requirements or management's assertion they complied. To express opinion, practitioners we know accumulate sufficient evidence in support of compliance, thereby limiting attestation risk to an appropriately low level. So as always in an examination, we do gather evidence. So what's this attestation risk? It's in B. It's the risk that the practitioner may unknowingly fail to modify appropriately his or her opinion on compliance. And it's a product of some things we saw in the first auditing course: inherent risk, control risk, and plan detection risk. I'm not concerned about those at this juncture. But attestation risk is analogous to acceptable audit risk in an audit. So we say everything's okay when it really isn't. There's always that risk around. C and D, we don't really need to go over. Even this report, it's very similar to an audit report. F, don't have to worry about that. Management representations, know that we do get a letter of representation for management. And if they don't give it to us, we'll probably withdraw. So we do get a letter of representation by management. If they don't give it to us, we'll probably withdraw. And there's a short AT 601 case. Just do that for homework. for your own life. You don't turn it in or anything like that. Questions there about AT 601? Oh, we ended early today. That's everything I have for you. I guess we could look out there. No, I think Selena Josie's already gone, isn't she? Darned. She would love to come in, I'm sure, and start again. Oh, nobody's enthusiastic about that. Okay. Well, then I guess we'll declare this lap time, and I will look forward to seeing you in 2 weeks. Have a good one. Appreciate it, Sherry. Getting colder and colder in here, isn't it? Yes, with our thermostat there that doesn't work. Bye-bye. Okay, sure. Well, yeah, what you got? I'm just going to stop my video here. One thing about it. And there we go.